Hi everybody, it's FIBO Group and you are watching to the Market Watch review. The 7% December CPI print didn't stop the dollar from weakening widely. The dollar index saw a 0.65% drop, its largest fall since November. Still, the greenback can be bought broadly with sterling and dollar-bloc leading. The mix of emerging market currencies is not wide. After rising by around 1.2% over the previous two sessions, the J.P. Morgan Emerging Market Currency Index has become heavier. After reaching $1,830, gold is making a four-day gain. Oil prices are also reducing yesterday's gains that lifted the February WTI contract to $83. It is consolidating within a narrow range. Asian Pacific market. Tokyo raised its COVID alert in the face of a growing pandemic. It is now at the second highest level of all four. The capital has seen its highest number of cases in the last 4 months. Yesterday's dollar sale was a little over JPY 114.40, almost 2 yen below its multi-year peak of January 4. Although there hasn't been any follow-through selling, the dollar has not moved above yesterday's settlement of 114.65. Today's uptrend line is at 114.30. The Australian dollar rose to $0.7280 yesterday, surpassing last month's highs and pushing past $0.7300 today. Market of Europe. Today, the UK has two sets negotiations. First, Truss, the Foreign Secretary, meets with Šefčovič from the EU to discuss the Northern Ireland Protocol. Truss could be the next Prime Minister Johnson. Second, India and the UK launch free trade negotiations today. This is just the beginning of what will be long-term talks. The official selection of Italy's president begins on January 24. Since the middle of November, the euro traded in a $1.12 to $1.14 trading range. Yesterday, it reached $1.1480. It closed above the downtrend line that was in place since last April/May. Yesterday, it was close to $1.1435 and today it is a little lower. For the first time since September, sterling has surpassed its 200-day moving mean $1.3735. Yesterday, sterling met the 50% retracement goal of the slide from last year's June 1 high $1.4250. It was slightly above $1.37. Market of America. The dollar is unlikely to be influenced by the U.S. PPI or weekly jobless claims. Instead, it appears to be trapped in a strong position adjustment. Many people are aware that the greenback has often weakened since the beginning of the monetary tightening cycle, but that seems to still be a few months away. The U.S. dollar's head and shoulders are gaining ground against the Canadian dollar. On Tuesday, the neckline at CAD 1.26 had been removed. Yesterday's push saw greenback move to the 200-day moving mean near CAD 1.25. It has now been bought to nearly CAD 1.2465. Nearby support can be seen at CAD 1.2450. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.